Vikas calls his friend CA Sarvesh after hearing the news on ITR form. He asks Sarvesh if ITR forms have been released. Sarvesh tells him that they have come. Vikas then inquires about the type of forms that have come and which form do salaried people like Vikas have to fill. Sarvesh explains to him that the Income Tax Department has issued online ITR 1 and ITR 4. Vikas asks him who has to file ITR 1 and who will have to file ITR 4. CA Sarvesh sends Vikas a video link and asks him to watch it to understand better.
Were you also waiting for income tax return, that is ITR form? Now the wait is over. Income Tax Department has issued 2 out of 7 forms, ITR 1 and ITR 4 online. Both forms are for resident Indians. Returns can be filed for assessment year 2023-24 by visiting the e-filing portal. Who has to file ITR 1 and who has to file ITR 4? Before knowing this, let us get to know who is required to file ITR.
In the old tax regime, it is necessary for those individuals who are up to 60 years of age and have a gross income of more than 2.5 lakh rupees to file ITR. At the same time, senior citizens, that is, people above 60 years, have to file returns if they earn more than 3 lakh rupees, and super senior citizens, that is above 80 years, have to earn more than 5 lakh rupees. From the financial year 2023-24, the limit of income tax exemption in the new tax system has been increased to 3 lakh rupees. This means, on choosing the new system, there will be no need to file returns on annual income of up to 3 lakh rupees. Assessees paying electricity bill of more than 1 lakh rupees during the financial year, spending more than 2 lakh rupees on travelling abroad, or depositing more than 1 crore rupees in the current account will also have to file the return even if the income is less than the income tax exemption limit. The ITR will have to be filed if the business sale exceeds 60 lakh rupees and income from any profession exceeds 10 lakh rupees. The returns have to be filed even on deduction of more than 25,000 rupees, that is TDS or TCS. In the case of senior citizens, this limit is more than 50,000 rupees. Now let's see who has to file ITR 1 and 4. ITR 1 is called Sahaj form. This form is for those taxpayers whose total income is up to 50 lakh rupees. This income should be from salary or pension, from a residential property, or from other sources like interest. Income from lottery or horse racing is not included in this. ITR 1 is also used for agricultural income of up to 5,000 rupees. However, if you are a director in a company holding shares in an unlisted company, then ITR 1 cannot be filed. Salaried individuals whose income is less than 50 lakh rupees can file ITR 1. Similarly, ITR 4 form is called Sugam form. This form is applicable for individuals, families and firms other than LLPs whose total income is up to 50 lakh rupees and income from business and profession, as well as which is computed under section 44AD, 44AE and 44ADA.
ITR 4 is an ITR which is to be filed by a person who has opted for presumptive taxation scheme and his or her income does not exceed 50 lakh. The income tax law provides for some rules which presumes that your income is a certain percentage of your receipt or your sales. That is called presumptive taxation. For business people, it is section 44AD, where the law presumes that your 8% of your turnover is your profit. It applies to the people who are engaged in business and the total turnover does not exceed 2 crore. Out of this 2 crore, the transactions which have been done through non-cash, up at 6%, reduced rate of 6% is presumed. The second presumptive taxation scheme is as regards specified professional like chartered accountant, engineer, architect, etc., where the law presumes that 50% of your gross receipt is your income. It applies to those whose gross receipts are below 50 lakh. And the third base scheme applies to the owner of a goods carrier, where the law presumes that your income per month is based on the tonnage of your vehicle.
After knowing who the ITR 1 and 4 are for, now it's time to know what should be done while filing the return. After logging into the e-filing portal, that is eportal.incometax.gov.in, and selecting the assessment year 2023-24, you will see the pre-filled data, that is pre-filled information. You will have to match the information already given in the online form with Form 16, Annual Information Statement, that is AIS, or Form 26 AS. Salaried person gets Form 16 from the employer. It contains information about salary and tax deducted on it, that is TDS. Form 16 is a TDS certificate. Similarly, other than the employer, if any organization or person deducts tax, then TDS certificate is received from there.
In the normal circumstances, the salaried people are expected to receive their Form 16 by 15th June. In case anybody has not received the Form 16, he can still file his return, because with the introduction of AIS, that is Annual Information Statement, all the information about your salary and tax deduction are at finger's tip away, and you can access it through income tax website. So even if you have not received a Form 16, you can still file your ITR.
To make the process of return filing easier, the Income Tax Department has provided the facility of Annual Information Statement, that is AIS. In this, the taxpayer will get information about every transaction done during the year. This includes 46 types of transactions, include income, investment, TDS, shares, mutual funds, rent, interest, purchase and sale of property. You can download AIS from the Income Tax Department's website. AIS app is also present on the Play Store. Now let's get to know what precautions should be taken while filing the return and what problem can be faced if there is a mistake. It is important to choose the right ITR form to avoid any problem. Choose the ITR form according to your source of income. Apart from salary, if there is rent, interest, capital gain or any other income, then definitely show it in the return. If your income comes under the purview of tax, then definitely file the return. Match the pre-filled details carefully. There can be trouble if there is a difference in TDS already filed and newly deposited.
In case the mistake has happened, which results in variation in income as reported and as assessed, the Income Tax Department can levy penalty. A penalty of 50% is applicable where the difference has arisen unintentionally and is not with an intention to defraud the revenue. 200% penalty can be levied where the taxpayer has intentionally attempted to evade the tax. And in some cases, the Income Tax Department can launch a prosecution against the taxpayer who have done it deliberately and where the amounts involved are high and which may result in imprisonment.
The last date for filing income tax return is 31st July 2023. There's scope for mistake in filing ITR in the last minute. In such a situation, it is better to take help of a CA than to make mistake while filing ITR. Also, file the return on time. Not only this, penalty will also be imposed for filing the return after the last date. After filing the ITR, verify it as well. Otherwise, the refund may get stuck.